It's 29,992.
Oh
30,000. 30,000 is here. And the first of them celebrating it over here is Anuj Singhal. Anuj Singhal says 30,000. Let's have a look at the way Anuj Singhal is dressed. It's 30,000 over here. This is very big. It's a big day for the markets. This kind of a celebration was expected. And, well, it has come. Important to read how the markets are
The big moves have come in the banking space this morning. So, Bank of Baroda, PNB, Axis, Kotak Mahindra Bank, all these stocks up about 4 to 5% and it's a 400-point salute that we've seen for the market with the Sensex hitting that 30,000 mark. It's been blue sky scenario for the market. Clearly, we had a pragmatic budget. We had this surprise rate card. Global cues are positive, and all of that put together have resulted in the market hitting that 30,000 level on the Sensex today. Take a look at our entire team. Everyone's ready with their 30,000 t-shirts. And that is really unexpected. We didn't plan for it this morning. But here we are, all of us in the studio wearing our 30,000 t-shirts. So let's first go across to Anuj. Anuj, big move today.
Yes, indeed, Sonia. So 30,000 is here on the Sensex, and I mean, this really is the RBI factor. Clearly, I mean, who would have thought? This is the second time it's come actually in a matter of a month or more, right? I mean, last time also the RBI rate cut led to this big surge. First up in the morning, and then the market really, had a big rally. And today also we have seen this. So really salute to the market or to the Sensex. 30,000. I remember in 2002 or 2003, post that, when the market was in bear market, the Sensex was sub 3,000. So from sub 3,000 to 30,000, 10-fold move.
Anuj, you want to tell everyone the bet that
Yes, I've lost my bet to Sonia, but
we had a bet that
you should send a big thank you note to Dr. Rajan.
We had a bet that the Sensex would reach 30,000 before the 15th of March. That was what I said. And Anuj said no way, so now I've won that bet.
I was wondering why wait till 30th. Remember, I was telling you 30th. I thought it'll come in a few days.
Yes.
Well, nobody expected that the governor will be batting on our side. So that's okay. Just to read out the rates to you. And meanwhile, let's look at our team as well. Is the team still posing with its 30,000 t-shirts? Okay. The team in the studio is still there with the 30,000 t-shirts. The others have gotten to work. It's Punjab National Bank leading the ranks with 3.3, DLF 3%, Baroda 3%, Kotak Mahindra 2.6, HDFC 2%, SBI 2%, ICICI 2.2, Axis 2.5. Kane, then come the rest, of course. Kane is 1.7. I forgot HDFC Bank 1.5. Larsen 1.6. Maruti 1.3. Mahindra 1.2. IndusInd 1. IDFC 1. 1, almost 1. ITC is 1.2. Jindal is up 1.27. BPCL 0.8. HCL Tech 0.9. I mean, unrelated stocks are moving up. Like for instance the tech stocks, okay, Bajaj Auto 1/3%, ONGC 0.5%, Tata Consultancy 0.5%. Any red stocks? Okay, look at these guys sulking. Sun Pharma, Dr. Reddy's, Tech Mahindra, Wipro, and I don't know why Grasim should be in that list, but that's down 0.25%. And Z Entertainment down 1/3%. I don't even feel like looking at that list. Let's look at the Sensex and see if there's anything in the red at all in the Sensex. There's only Dr. Reddy's and Sun Pharma and Wipro in the red. Nirmal Jain, okay, you want to read any of the mid-cap stocks that are quickly, for the skies?
The mid-caps are not actually, doing as well as the frontliners, but there is a move there. Look at the market breadth, 700 stocks on the advancing side, and you have a whole host of real estate stocks that are doing really well today. So India Bulls, Unitech, HDIL, all the rate sensitives. But let's go across to Nirmal Jain.
Just one word, Sonia. The market reaction today is not as euphoric. The mid-cap stocks are actually underperforming, and the Sensex, after hitting 30,000, has come back a bit. Let's see if it can go back to 30,000.
I don't care. I got to wear my 30,000 t-shirt. I've been waiting for this from what? End Jan, right?
Yes.
That was the day it went almost to 30,000. I mean, 29,000.
And on expiry day, it just somehow
went back. That Thursday,
we get a daily dose of euphoria in this market. I mean, now things are progressing so fast. With every passing day, there's a positive
I was wearing
event.
my shirts every day, Monday, Tuesday, thinking that we're going to get 30,000, we're going to get 30,000 post the budget. We didn't get. Today I thought, oh God, the budget is factored in, let me come in my sari. And the governor gives you a reason to get to 30,000. Looks like they've spaced themselves out. Okay, you push for 2 days, I'll push for 2 days and get the market to 30,000.
All right, let's go across to Sudarshan. He's waiting by. I wish we could have sent him a t-shirt as well. I'm sure he would have worn it. Sudarshan, big day for us. 30,000 on the Sensex. You know, not too many of us would have thought that we could get to see this so early in this year. But nevertheless, big moves coming in. And you have been keeping the faith in this market for so long. It's something that you've been telling traders for a long time now.
Well, thanks. And I think I deserve a t-shirt.
Yes, you do. Yes, you do.
We will send one across for sure.
Yeah. But see, the markets are in an uptrend. If you are a very short-term trader, this is a golden opportunity to take some money off the table, take profits. If you have anything more than a 1 day, 2 day view, then stay put. We had talked about a pattern target of 9,300. That target is intact. It will take some time to come. It won't come in a day or two.
Okay. Well, how do you play today itself? Take away your positions, long positions right away?
Oh no, there's no rush. I think this market, after that initial decline which we are now seeing, should again rally back. So there's no rush. Somewhere in the day, some positions should be taken off.
Okay, Nirmal Jain, the chairman of IIFL, is with us. Sudarshan, stay on. We'll get the first words of euphoria from Nirmal. Nirmal, 30,000 is just one milestone, you think?
Yeah, I think it's just a milestone in the journey because we're in a bull market, and so 30,000 as a number looks, one big milestone. But obviously, some small percentage increase from yesterday, and I mean, it's a trend which has continued, and in fact, it has been now supported by a monetary policy as well, because people are always concerned about conservative stance of RBI, whether that will also be supportive for growth. And so I think budget has been good, but it took some time to sink in, and there's huge investment to sort of restart the economy. And the trend of interest rate cut will further help the revival of investment cycle. And I think so markets will keep moving up and down, but there's one milestone which, it had to cross, and it did.
Morning. That's true. You know, the RBI seems to be satisfied with the fiscal deficit reduction as well, as per the note that Governor Rajan put out today. So what does that tell you about how you should increase your allocations in this market? Do you raise your weightage in cyclical names, not just banks and autos, but even other pockets like infrastructure, power, beaten down names, etc.?
I think so. In fact, banks would lead the rally, as we discussed earlier also. But I think now even these beaten down cyclicals, infrastructure in particular and power sector should do well. And as government is talking about now 20 gigawatt of capacity on plug and play basis, and not getting mired in the controversies or delays. So that will have a cascading impact on sectors that supply equipment to power companies, as well as several other. In fact, it can kickstart the economy. So I think the rally will be more broad-based. In the first phase, you'll see the large caps and the big names leading. But as it sinks in, and as the positive euphoric mood spreads, and you'll see mid cap and small cap will also follow.
Yeah, I take your point, Nirmal. Clearly, it will ease the burden as and when rates start falling, and wholesale rates have anyway fallen a lot. As banks start passing on the rates, so you are going to see stress relieved for a larger part of the economy, and therefore, maybe the infrastructure sectors will start reacting. We've got Nilesh Shah of Envision also joining in. Nilesh, this is a big pre-Holi gift coming in. What's the attitude? What's the outlook now? Do you think we're going to see some faster gains in the share prices?
Well, Lata, this was precisely the need of the hour. This is going to be a significant booster for the economy, as well as for the markets. And what it looks like is that this is the continuation of a trend which the RBI governor had started, and it's only like gathered further momentum. Yeah. So I think this was clearly, one by one, all the variables seem to be falling in place, and this was clearly the much needed catalyst that the market required at this stage, and the economy which required at this point of time, to basically take our markets even higher from here.
Okay. What's your sector or stock mix now? Will you start targeting the interest rate sensitives? How does all this influence your stock pick?
Well, clearly the cyclicals and the rate sensitives stand to gain significantly from this move. And as I mentioned earlier, that this is probably just a continuation of the trend which was started. So clearly on the back of this, sectors like financials, infrastructure-related sectors, core sectors, some of the materials like cement, engineering, across the board, you're going to see a lot of positive sentiment, and clearly this is going to definitely help companies to kind of go ahead with some of the investment plans which have been on the back burner. So clearly a combination of policy initiatives from the central government, including initiatives from the budget, as well as rate cuts from the RBI, I think is probably an extremely good virtuous combination that the markets could have hoped for.
So what do you do with, Nilesh, hi morning, what do you do with your positions that you have in some of the defensive names like IT, pharma? Do you, churn some of your money into cyclicals as you suggested?
Well, it is a case for both. Clearly, cyclicals stand to gain from these policy initiatives. So you probably need to kind of start adding a few more positions on the cyclicals and the rate-sensitive side. But we clearly believe that this defenses will clearly be growth kind of an opportunity, where we believe that sectors like IT, pharma, consumers will continue to witness secular growth. It's quite possible that from here on, rate sensitives and cyclicals need to be loaded up more, as they have the potential to outperform going forward over the next 1 to 2 years versus the defensive. But I clearly believe that a portfolio should have a combination of both cyclicals as well as defensive.
Okay, Nilesh, stay on with us. We also got Sunil Garg from JP Morgan now joining us. Sunil, hi, morning. First up, this rate cut from RBI, do you think it's a catalyst to take market further from here, maybe another 4 or 5%, given the kind of anecdotal evidence we have had about the rate cut?
So look, I think if one needs to put the rate cut in conjunction with the government's ability to run a counter-cyclical wider fiscal deficit, and I think it's a monetary stimulus and a fiscal stimulus working in tandem. I think this is apart from the fact that it is a surprise, I think it shows intent on part of the government to boost the economy. And while the economy is recovering on a cyclical basis, it absolutely needs the support of the various stimulus measures. So, look, I think one of the big resistance levels for this market was the 8996 peak that we saw recently, and I think the market is definitely going past that, and I think we are in a new high territory. So I would trade this market long and not be held hostage to a 4-5%. This could be a bigger move, but I think definitely a very positive move here.
Okay, why don't you elaborate that point further, Sunil? When you say that you would hardly be prisoner to 4.4 or 5%, what kind of gains are you looking at from this market at an index level, say, in 6 months or in 2015 itself?
See, Lata, by definition, we are in new high territory, so there can be no definition of how high we might go. I think the biggest question mark, has been in this rally is that it has been built up on expectation with, the economy still requiring help. Ultimately, we want to see the macro positives translate into bottom line earnings and consumption pick up. And, the last PMI print was weak. So very clearly, there's a recognition that the economic fundamentals have still some way to go before they are on a firm improvement path. And I think the market's going to discount the earnings as we go ahead. And, as the previous speaker was talking about being a little bit more focused on cyclicals, I think this is a market where you play financials and you play cyclicals for a classic revival, and you want to pick your battles within the cyclicals. But I think generally the market goes up. I know I'm not answering your question directly.
No, it's okay. Levels. But will you go to even, say, real estate, for instance? By the way, I just wanted to point out it's a penny stock, but Nitesh Estates is 20% higher on circuit. Sunil, would you go to the extent of even looking at real estate now?
See, I think the real estate market, so let's put a definition. Whether it's infrastructure or real estate, I would look for companies that have the ability to grow, and therefore lack of too much leverage in a company is going to be a problem. Okay, it doesn't matter whether the sector is going to benefit, but if the company itself has leverage or excessive leverage, that's going to become a headwind. And that is the problem we have with some infra companies and some real estate companies. And so I would use that as a guide, but in general, the answer is yes, real estate should be a beneficiary. I would play that, but not levered up companies.
Okay. Nilesh, let me come back to you. The market is a bit narrow today. The mid-cap index is underperforming quite a bit. And we haven't really seen a big, massive reaction in infrastructure, capital goods, or real estate names. I mean, to the extent that we saw last time when the rate cut happened. What's that telling you, or am I reading too much into it?
Well, our sense is that clearly when a move like this happens, clearly it's the financials which take the lead. Particularly the PSU banks within that clearly should be at the forefront of that move. That's clearly the low-hanging fruit for impulse traders or short-term investors. And I think as the rally then begins to kind of get a little more broad-based, it takes within its ambit advances even in sectors like real estate, infrastructure, and some of the core sectors. So I clearly believe it's just a matter of time. One also has to keep in mind that, this is probably one of those very rare occasions where the market has rallied prior to the budget, on the day of the budget, as well as post-budget. So I think clearly you've also seen a situation where the markets have rallied quite a bit. So it's, I think, just a question of a matter of time before this rally percolates down even further some of the mid-caps, small-caps, as well as gets more broad-based in terms of sectors. So I think it's just a question of time rather than anything else.
Well, actually, at the moment, the banking gains have moderated a bit. 2.7, 2.5% is about all we are seeing in terms of even banking gains. They had shot up to like 5-6%. Sunil, one final question to you. Do you think the attitude of the foreign investor changes now? As you pointed out, it's fiscal stimulus getting buttressed by monetary stimulus as well. So now do you think that you're going to see a bigger gush of money? We've been seeing a decent flow in the last 8 days. Does the flow broaden?
I think, definitely it helps the sentiment, and, given that we are now seeing, like if you take the weekend rate cuts in China, and yet that market is not able to register gains. So clearly there is a focus a little bit more towards areas where policy is actually working. I think, one still has to put some element of uncertainty on the government's ability to take its budgetary provisions through, as, the dynamics in Parliament are well known. But yes, I think, standalone, the events of the weekend and today, should be boosting the flows in the market.
All right, Sunil, we'll let you go on that note. Thanks for your thoughts. By the way, the market is still holding. The Sensex is still holding with a gain of almost 300 points, and the Nifty very close to that 9100 level.